Hi, and welcome to Squirrel's YouTube channel. This series of videos is part of our Squirrel School, where we'll be guiding you through the forest of self-managed super funds so you can grow your nuts for retirement. Make sure you subscribe so you never miss a video, and give us a thumbs up if you find them helpful. Paying into your super fund is called a contribution. In this Squirrel School video, you'll learn about the types of super contributions, when you can make them, and how to maximise your fund's potential. Let's get started. Super contributions are split up into two categories, concessional and non-concessional. Concessional contributions are those that hit your super fund before you've paid tax. These include employer contributions and contributions made by salary sacrificing. As these come from pre-tax income, they're taxed at 15%. Non-concessional contributions are any funds that are added to your super fund from your after-tax income. Basically, anything you deposit into your super fund from your own pocket. Since you've already paid tax on them, you don't pay tax on these contributions within your fund. If you're self-employed, you can contribute to your super fund yourself. These are called personal super contributions. These are generally tax deductible, providing you don't exceed a certain amount. Super contributions are subject to caps. As of the 2017-2018 financial year, everyone is subject to a $25,000 concessional contribution cap. If you exceed this amount, you may receive a notice to pay extra tax. That's because these contributions are taxed lower than your standard income tax. Non-concessional contributions are capped at $100,000 per year. Exceed this cap and you'll be faced with a 47% tax rate on any additional amount. So, for you self-employed Squirrel students, your concessional contributions are those for which you can claim a tax deduction. Make sense? As of July 1st, 2017, all super fund members under the age of 75 are eligible to claim a tax deduction on contributions up to the concessional cap of $25,000. This is great news for those who are self-employed, partially self-employed, or with an employer that does not offer salary sacrifice contributions. Now, once you've tax deducted your $25,000 limit, everything above is considered a non-concessional contribution. That's when it counts towards the cap of $100,000 we mentioned in Module 2. As of July 1st, 2018, concessional contributions attract their own carry-forward facility. This means the $25,000 concessional allowance can be rolled over to use in the next 5 years. This only applies to those with super fund balances of less than $500,000. Now, for non-concessional contributions, the ATO offers the bring forward rule. Rather than rolling the caps over for future use, you can bring them forward for earlier use. Let's take a look at two super contributors. This is Martine. She is self-employed with a super fund balance of $230,000. When her business expanded, she started making contributions of $30,000 to her super fund each year. Martine can claim a tax deduction of $25,000 to meet her concessional contribution cap, and those funds will be taxed at 15% once they're in a super fund. Now, the remaining $5,000 is considered a non-concessional contribution and counts towards her $100,000 cap. If Martine's business grows again, she can make use of the bring forward rule to contribute up to $300,000 in non-concessional contributions by using her cap from the next 3 years early. This is George. His boss makes $7,600 of super guarantee payments on his behalf. George has decided he would like to grow his super and commits to contributing an extra $5,000 per year. He deducts this $5,000 from his taxable income on his tax return each year. 3 years later, he inherits $100,000 from his father's estate, and he wants to contribute it to his super fund. He's able to carry forward the remaining $12,400 of concessional contribution allowance from the previous 3 years, giving him a bigger tax deduction. Thanks for watching today's Squirrel School on super contributions. Now you know all about making concessional and non-concessional contribution to your super fund. Go nuts! And if you like this video, give it a thumbs up and make sure you subscribe so you never miss a Squirrel School video.